Here's an example of how a bullish breakout trade looks with the Smart Money Breakout Channels indicator. When volatility tightens and the indicator draws a breakout channel, it marks out the range where price has been consolidating. Inside that box, the volume bars engage show you how buying and selling pressure is building up. As soon as price breaks above the top of the channel and closes with strong bullish volume, that's your confirmation that buyers are in control. The trade idea is simple. You enter a buy on the very next candle after the breakout close. Your stop loss goes just below the candle low, and your first target can be set equal to the height of the box, with room for higher targets if momentum continues. It's a straightforward breakout setup. Box forms, volume confirms, breakout candle closes, and you step in with the next candle. Here's an example of how a bearish breakout trade looks with the Smart Money Breakout Channels indicator. Just like before, the indicator first draws a channel when price consolidates and volatility compresses. This range shows where orders are stacking up. Now, instead of breaking to the upside, price closes strongly below the bottom of the channel. If that breakout happens with heavy selling volume, it confirms that sellers are taking control of the move. The trade is straightforward. Enter a sell on the very next candle after the breakout close. Place your stop loss at the middle of the box, and aim for at least the height of the box as your first profit target, with more room if the downtrend accelerates. It's the mirror image of the bullish setup. Box forms, volume confirms, breakout candle closes, and you join the move on the next bar. In this video, I'll walk you through how the Smart Money Breakout Channels indicator works, and how you can start using it to find breakout trades. First, open up TradingView and click on the Indicators tab at the top of your screen. In the search bar, type Smart Money Breakout Channels and look for the one published by Algoalpha. Click on it, and the indicator will automatically load onto your chart. Once it's applied, you can close the search box and you're ready to go. What makes this indicator powerful is how it automatically draws channels whenever volatility compresses. These zones highlight where the market is building up pressure before a breakout. You can use it on any time frame and in any market, whether it's Forex, crypto, or stocks. Alright, once you drop the Smart Money Breakout Channels indicator onto your chart, here's what instantly stands out. First, you'll see colored boxes forming around areas where price has been moving sideways. These aren't random, they mark periods of low volatility where the market is consolidating. Each box stretches from the highest point of that range to the lowest point, showing you the exact boundaries traders are watching. Inside the box, you'll notice volume bars plotted directly on the chart. These reveal whether buying or selling pressure is dominating while price is stuck in that zone. On the right side of the box, there's also a gradient gauge with a pointer. That gauge shows the balance of buy versus sell volume in real time, so you can quickly see which side is gaining momentum. If price breaks above or below the box, the channel adjusts and highlights that breakout as a key shift in control. You can also turn on alerts, so the moment a new box is created or a breakout is confirmed, you get notified without needing to stare at the chart all day. This simple but detailed display makes it easy to spot where accumulation or distribution is happening, how volume is behaving, and when the breakout finally comes. Alright, let's quickly check the Smart Money Breakout Channels indicator settings. You'll see nested channels at the top. Leave it off if you want one clean box at a time, or switch it on if you'd like to see multiple channels stacked together. Right below that is strong closes only. Keep this on if you want to filter out weak wicks and only catch breakouts confirmed by strong candle closes. Next, check the number inputs. Normalization length is set to 100 by default. A bigger number smooths out volatility and gives you steadier boxes. A smaller number makes it react quicker, but it can get noisy. Box detection length is set to 14. If you raise this, you'll get fewer but stronger channels. Lower it, and you'll see more boxes forming, though some will be weaker. Scroll down to volume analysis. With Show Volume Analysis on, you'll see buying and selling pressure displayed right inside the box. Volume display mode lets you pick between raw volume, up-down comparison, or delta. Volume delta. Time frame source is 1 minute by default, but you can match it to whatever time frame you're trading on. And volume scale adjusts the height of the volume bars. 0.5 is the balanced setting. Finally, under Appearance, you can change how things look. Volume text size controls how big the numbers appear. Bullish color is green and bearish color is red, but you can switch them if you'd like to match your chart theme. Once you're done, hit OK, and the breakout channels are ready to guide your trades. Next, trade examples. Let's start with the most straightforward setup, the breakout trade. When price consolidates and the Smart Money Breakout Channels indicator draws a clean range, you're looking for a strong candle to break out of that box. If price closes firmly above the top boundary and the volume gauge shows strong buy pressure, that's a bullish breakout. You enter a buy on the very next candle. Place your stop loss just below the breakout candle, and aim for a target at least equal to the height of the channel. If momentum keeps going, you can trail your stop and let the trade run. Now let's flip that same idea for a sell trade. If price breaks down below the bottom of the channel with a solid bearish candle and strong selling volume, that's your signal. Sellers are taking control. You sell on the next candle after the close. Stop goes just above the breakout candle, and your first target should match the channel's size. In this case, if you let the trade run, you can see that price moved in our favor and hit the profit target exactly as planned. Next up is the break and retest trade, which gives you a bit more confirmation. For a buy trade, you still wait for price to break above the channel. But instead of jumping in right away, let it pull back and retest the breakout zone. If it holds and you see a bullish candle with volume support, that's your entry. You buy there, with your stop placed just below the upper channel, and target the size of the box or more if the move expands. If momentum keeps going, you can trail your stop and let the trade run. Now here's how it works for a sell. After a bearish breakout, wait for price to climb back up and test the broken support as resistance. If the retest fails and you get a strong bearish candle with heavy volume, it confirms the level is holding. That's your moment to sell. Place your stop just above the lower channel and aim for the next move down, starting with the channel size as your target. In this example, you can see that after the entry, price moved exactly as expected and hit our take profit target. The third approach is what we call the volume bias trade. In this setup, you're watching the volume inside the box before any breakout happens. If you start seeing consistent buying pressure while price is still ranging, with green delta bars and the gauge leaning upward, that's a clue that buyers are loading up. When price finally breaks out above the box, you already have confirmation. Enter a buy on the breakout candle. Stop below the breakout candle, and aim for continuation beyond the box size. In this example, you can see that after the entry, price moved exactly as expected and hit our take profit target. The sell version works exactly the same way. If the volume inside the channel starts showing heavy selling pressure, red bars stacking up and the gauge leaning down, it's a warning that sellers are preparing to move. When price breaks below the channel, enter short right away. Place your stop above the breakout candle and let the volume direction guide your target. If the buildup was strong, you can often catch a much deeper move. And that's how you trade with the Smart Money Breakout Channels indicator. Whether you're catching clean breakouts, waiting for retests, reading volume pressure, or spotting failed moves, this tool gives you structure, confirmation, and timing all in one place. The key is to stay patient. Let the box form, let volume guide you, and only step in when the breakout is clear. Always use proper risk management. Test these setups on demo first, and adjust your approach based on your trading style and session timing. Thanks for watching, and I'll see you in the next one.